Hello friends, this is Raj Sastry from Raj Option Trading. Today is September 5th, 2021. I want to cover stock market weekly update, macro view. With that, let's jump in. So we will talk about major stock news, stock performance and sector performance, review performance of major indices and spot major trends and review performance of major ETFs and stocks and spot few good stock to buy. So with that, let's get started here. From a broad market snapshot perspective, we got basic materials dropped for the week, and we got here financial services. Think about big banks like JP Morgan, Wells Fargo, Goldman Sachs. They dropped a little bit, 2% drop in 1 week. And then we got industrials dropped by a little bit, minus 0.3%. And as you scan through here, we got real estate doing really great, up 3.7%. And we got utilities and technology doing well, in addition to consumer defensive, consumer cyclical. So as you look through this, I got here 1 week performance here for you to take a look at. And then we got here 2 week, 1 month, 3 month, and 6 months. The top section here will tell you, what's the trending as of now. Clearly you can see here technology has got a little weakness here, and as you go through here, energy, it has got a little bit weakness. Energy stocks have done really nicely last year, but now they're kind of cooling off. So you can spot the trends like this quickly by looking at this snapshot. But if you're a long-term investor, you can pay attention to 1 year, 3 year, and 5 year performance here. Clearly, as you think through here, technology has done great. As you can see here, in 5 years, 282% performance. And if you look at 3 years, again, triple digit, and even 1 year, it's done great. So I would like you to look at this long-term performance in sectors like technology here, and then we got financial services doing great, and we got consumer cyclical again doing great, and we got basic materials which have done well, and also we got here industrial, they've done well also. So the way to think about this is really look at the strong performance in the longer term, like technology, like real estate, financial services, and even consumer cyclical, and then see if you can spot some temporary weakness in the shorter term, maybe 1 week, 2 week, and 1 month, and 3 month, and 6 months. That's when you buy some good stocks in those sectors. As an example, technology doing great, and we got some disappointing temporary weakness in the technology in some areas. For example, you could look at stocks like Zoom as an example, even Autodesk, and stocks like Viva Systems. They all have some temporary weakness. You could buy some in the temporary weakness, given the long-term story for technology is doing well. Similarly, banks, they've done great. Financial services have done great in 5 years, as you can see here, 105%. But you got some temporary weakness. For example, JP Morgan and Wells Fargo, especially Wells Fargo, looks like they got some regulatory issues. Stock dropped a lot. And stocks like Goldman Sachs, Berkshire, even Berkshire Hathaway, Morgan Stanley, you could pick some of those stocks on this temporary weakness. So that's how I would approach these sectors, to really identify strong sectors long term and see where are the weaknesses in the 1 week, 2 week, 1 month, 3 month chart, and spot some good players in those areas, and pick them up slowly and build that portfolio that way. So with that, let's jump in here and look at major stock news. From a major stock news perspective, we got here Bitcoin racing above 50,000. So cryptocurrency, the Bitcoin is really up 81% from year's low. So the moment you hear news like this, I would stay away from Bitcoin a little bit. And in the meantime, when I spot some weakness, Bitcoin always, and cryptocurrency in general, they always have their ups and downs. on the down days when Bitcoin drops a lot or cryptocurrency drop a lot, that's when I pick up stocks like Marathon Digital, and even stocks like BT, and the blockchain stocks. Just buy some of those and take it from there. But when we got news like this, bullish news, you could take some profit and have some money available for you to buy on the downturn. Then we got here bond market. Looks like day of reckoning is denied. So because of that weaker job report, this is where the Fed will keep buying the bonds. So the taper talks is really it's a little bit pushed out. That's why bond market is doing well. Their day of reckoning is denied or pushed out a little bit. So this will put some pressure, typically on the on the bank stocks, because banks want interest rates to go higher. But if the bond market is staying afloat with the taper talks pushing out, this is why bank stocks are really a little bit suffering here, because banks need typically a little bit higher interest rate. But if Fed keeps buying these bonds, that's not going to happen. And then we got here Broadcom here. The CEO, sees sustaining demand from telecom and cloud providers. I think this is a good secular theme here. A Avago or a Broadcom is a good stock. We should really buy Broadcom on any dips and accumulate. Then we got here Five Below. In general, Five Below and lot of the retailers, they are facing very tough comparison from last year. That's why you see stocks like Five Below, CHWY, and lot of the retail stocks are down, even American Eagle Outfitters, because it's simply not possible to really best the last year's comparison. That's why Five Below, one of the good stocks, it dropped 9%, and it's down 9% for the week. I would take advantage of this drop here and buy some Five Below at these levels. And then you got your CHWY. It's a pet food type company here. I think stock dropped 10%. Mainly because there's a disappointing customer numbers and Q3 sales guidance came light. So I would buy some CHWY stocks into this weakness here. I think it's a great stock. Off late, it's not doing that great. Now we got quarterly earnings. Stock dropped. It's good to buy some and hold it for a long time. Kathy Wood scooped Zoom after stock crashed. Looks like Zoom is doing something right. They are going after the adjacencies like Zoom phone. I think they got some email going on. I think they're doing the right things. I think Kathy Wood is right here. After this crash here, it's good to pick up some Zoom slowly and take it from there. And then we got here ChargePoint. Stock charges higher after sales beat, increased forecast, and company tops 56 million in quarterly revenue. It's beating the estimates, and even full year guidance jumps. So I think it's good to see ChargePoint is doing well. I would also look at other battery stocks along with this, and buy them slowly, because ChargePoint, as you know, has been not doing great. Also, most of the EV cohorts, they're doing not doing so well. I would buy stocks like Romeo, and even say FCell, QuantumScape. All those are good buys at these levels. I would buy slowly, including the EV stocks like NIO, XPAV, Lee, even Tesla, even Ford for the matter. I think they're all down. It's good to buy them slowly. Then we got here Okta. Looks like stock falls even after the earnings and outlook stock top estimates. But Okta, I think afterwards it recovered. I think Okta is a good stock to buy on any weakness. And then we got here Wells Fargo. Should investors be concerned about Wells Fargo's latest regulatory headache? And looks like they're weighing further action in regard to Pony or phony account scandal here. I would look at Wells Fargo here slowly and accumulate as it drops. It's a good stock. It's got its headaches once in a while, but overall it will do well. And then we got here Neo stock drops after the deliveries and outlook. Looks like it's cut, citing uncertainty in chip supplies. So Neo is one example here. I would look at even Tesla, XPAV, Lee, and even Ford and GM. They are all in a good buying territory here. This chip supply issue is lingering right now. I'm sure the global market and semiconductor companies, they will do well and address this imbalance. So with that, I would take advantage of the drop here and buy some of the electric vehicle makers and even automakers in general. Then we got here Autodesk. Autodesk drops after the Q2 earnings. I would buy some Autodesk. It's a great story. Company doing very well. They successfully transitioned into the cloud and recurring revenue and a subscription play. I would buy some Autodesk here and take it from there. So, sometimes you wonder, hey, all these sectors that we have seen, they're doing great. Why my stock is not going up? So that's the question many of you ask. The reason is, the sectors are really buying, these major stocks here. Probably you may be going after some smaller fish. That's why when the sectors are doing well, your stock is not doing great. I would, ask you to look at some of these stocks here and, buy some of them. For example, if you want to build a portfolio, you could look across these sectors here, buy, one or two stocks in each sector, and that way you can participate in broader stock market rally instead of, buying some unknown little stocks, expecting them to go up wildly. Especially this is true if you want to have some retirement portfolio, which you want to be balanced. I would say, pick up some stocks in these sectors here, buy one or two stocks in each of these areas. That's how you can build your retirement portfolio. If the stock drops, buy a couple more. If the stock goes up, stay put. So that's the way to build your portfolio slowly and consistently. Then we got your major indices. We got your Dow Jones Industrial Average, SPY, QQQ, IWM. Every time you see S&P 500 goes up, Dow Jones Average goes up. These are the stocks that are moving those markets. It's good to have some of these stocks in your portfolio and take it from there. So that way, when the market goes up and down, your portfolio also goes along with it. So that way, you're tracking with the broader market, not buying a very small stock in a huge quantity and suffering from losses or even sometimes ups and downs. It could be too much for you to tackle. That's why it's good to have some allocation in your portfolio for these major stocks, and then you can speculate in smaller plays and have some fun along with it. So with that, let's look at broader markets here. We got ES, which is S&P 500 futures. It's almost at 52-week high. I would be a little careful, buying, at these higher levels. I would wait for a little pullback and then buy. Same story with the Dow Jones Industrial Average. As you can see, it's almost at all-time high. I would wait for a little pullback here. And same story with Nasdaq. Nasdaq is cruising along pretty nicely. And as you can spot through this, last week, stocks are not done that great. They recovered a little bit, but pretty much in the trading range in the last few days. And then you got Russell here. Russell is kind of indicating, hey, what, don't be too happy here and complacent. There may be a little drop here. That's why Russell dropped a little bit on Friday, as you can see here. Sometimes Russell is a leading indicator. That's why you got to pay attention to Russell 2000 here, dropping a little bit on Friday. That might indicate what might come from broader market as we go forward. Then we got here bonds. Bonds, I think, barely budged. We got here inflation, and we got job report. That's causing bonds to hold up a little bit. I would watch bonds as a indicator, and as bonds stays flat here, I think stock market will be a little bit bullish. But if bond goes up, as you can see here, bond went up here and stock market came down. So that's why I would watch bonds here. It's good, bond is kind of cooling off here. But as Fed keeps buying the bonds, if they don't taper, I think bonds will be kind of staying flat here, or even they might even go up a little bit. That might cause some downturn in the stock market. And here we got 10-year treasury here with the taper, pushed out bond, bond buying program pushed out. TNX, the 10-year treasury, might stay flat or even go lower in the nearer term. That's why bank stocks are suffering a little bit here. So I would watch out the inverse relationship between the bonds here and TNX here, or interest rate. So it's good to understand the bonds, even though you're not a bond buyer. Understand what bonds are doing. That's a good indicator of what stock market will do. Right now, bonds are a little bit going down here. That's why stock market is staying float or flat. But if bond ticks up, watch out. You got to be a little careful here. Then we got here crude oil. Crude oil is, I think it's kind of jumping up a little bit here. Friday, it's, kind of down day here. Gold is also doing well, and dollar is coming down. Dollar coming down will help commodities like crude oil and also gold. So I think it's a good story. And also, the dollar coming down will help even major stocks because they do business outside, and that will help these companies, multinational companies, to do business. With that, let's jump in here and look at a few more details. All right, so now let's look at broader market here. So we got here a 5-year chart here. The first one is S&P 500. S&P 500 is doing great in 5 years. As you can see here, some bumps along the way, but generally this bullish market is going still strong. One thing I always look at is skew. Skew is a very good indicator. It's almost at nearly at all-time high here. I'll be a little cautious here because anytime skew stays above 160 level or even 150 level, you gotta be a little careful. As an example, skew hit 160 and there is a little bump you can't see here. It's a long-term chart, but here we got it hit around 160. Stock market tanked here, and again it hit here. We got COVID here. Stock market crashed. And along with it, it hit here. Stock market had a major, small drop here. So that's why you got to watch VIX here. VIX is trying to give a heads up here. Hey, you know what? Don't be too complacent. Something is coming up, because it's kind of staying flat here above 155 or 150 for a long time. And inflation, sorry, the VIX itself, I think it's kind of in a lower territory here, 16, staying there for a long time. The moment VIX stays low for a long time, that's where all the energy is building up. Any bad news, VIX can shoot up and stock market can come down. So I would watch out the VIX here. You could even buy some long-term VIX call options here, even though it might be a little bit, disturbing or a little bit not so great feeling to buy VIX here, given VIX is flat to down. But that typically pays out in the longer run. I would put some hedge some bets here, buy some long-term VIX call options and take it from there. Next, let's look at major ETFs, exchange traded funds. We got here SPY, which is all-time high. Same story, Dow Jones Industrial Average almost at all-time high. QQQ also almost at all-time high. So clearly the major stock indices are doing great. I would wait for a little pullback here. I would not jump in when it's almost at all-time high. As you can see here, all these indices always give you buying opportunity here. Down, 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 again here down. So if you wait for a few weeks, you will get these drops here. those are the good time to buy these major indices. And then you got Russell here. Russell is a great trading vehicle, and it's also good, in the long term to buy and hold. But if you time it right, it always gives you drops here, drop, 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 up. So it's good to buy, these ETFs like these major ETFs here, SPY, DIA, QQQ, and IWM, and buy them when they're down. And I think it takes some conviction to do that, but overall, that's always great strategy with these ETFs. Great thing about buying ETFs on down days. You don't need to worry about a stock or a company going out of business because you're buying the basket here. That gives you more conviction to keep buying more and double down as they go down. Then we got your bonds. Bonds are not doing great here, kind of in a trading range here. So that's why that might help stock market as you go forward. Then we got here gold. Gold is trying to tick up a little bit. It's a safety play here. Some people want to buy some gold or crypto just to hedge against. And then you got here consumer staples. Consumer staples are doing great here. Last few days are good. Typically when consumer staples does well and gold does well, that indicates major investors and traders, they are trying to go into the safety mode here and buy some of these gold and consumer staples, prepare for stock market to have a temporary setback. That's why you see gold is doing good and XLP is doing well. Even the XLU is also a defensive play. When folks are worried about interest rates and yields, they typically buy XLU because XLU gives you good yield, because bond is not doing great yield here, whereas XLU is giving a good yield. So anytime you see, this XLP and gold go up, you got to be a little careful and understand the money is flowing into this. It's going out of this broader stock market to some extent. The leadership will move away from one area like technology into other area like consumer staples and utilities. That's why people want to be a little cautious. Then we got here XLK, which is technology, doing great. As you can see here, it's almost at all-time high. Semiconductors again doing great here. As you can see here, all of this will give you nice buying opportunities, especially SMH. It's a great trading vehicle and also does long term very well. Peaks and valleys are very frequently coming, so that's why SMH is a great one to buy the dips. And then you got your XAR. XAR is big defense contractors like Lockheed Martin and Boeing, Northrop. They're all not doing that great. I would take advantage of this and buy some of those companies at these dips here, and I think it's a good one. They will always do well in the long run. XLE Energy, I think it's long term, it's a disaster waiting to come. There are some trading opportunities in XLE here shorter term, but longer term I would pay attention to renewable energy versus fossil fuel. Then we got XRT here. XRT is almost, it doesn't know where to go. The COVID and people want to stay home, XRT comes down. But there's a vaccine and booster, XRT goes up. This is a very good trading opportunity here. Last week, I think a lot of these retailers they came down because earnings was not great compared to last year. Think about Five Below, Chewy's, American Eagle Outfitters, and so on and so forth. I think right now retail stocks are good to buy because of this major drop. I'm sure they will pick up as we go forward. Then we got here IYR. These are the big real estate type companies and home builders. They're doing great. So I would typically wait for a little pullback here and then put my money to work. At this time, I'm not buying them. I might trim down a little bit of my positions, but not putting new money into IYR yet. And then you got financials. Financials is good to buy. Right now, financials is a little bit coming down, especially because interest rates are down. These big banks and financial companies, they want interest rate to go up. That's why these stocks are down here. I would pick up some names like JP Morgan, Wells Fargo, Goldman Sachs, Morgan Stanley, and even Bank of America, and so on and so forth at these levels, and accumulate slowly. Fed might surprise, sometimes with the increasing the rates here. That will be benefiting. That will benefit these bank stocks. And then you got XLI here. It's again up and down type. I would pick some XLI, onto this downturn. Think about big names like Honeywell, and Caterpillar, John Deere, and even so many of these stocks. You could buy them, when they're down like this, and take it from there. Next, we'll look at major stocks here and see what we can spot here. From a major stock perspective, we got here Microsoft. Microsoft is squarely in a bullish territory, as you can see here. We got here 25-day moving average, 50-day moving average, and even 100-day moving average. This stock is squarely above all the moving averages. Looks like Microsoft tend to, come down to 25-day moving average and go up. The story repeats. I would wait for a little drop here. If it touches 25-day moving average around say 300 or so, I would pick some Microsoft. It's a long-term good play, but right now I would not buy. I would wait for a little pullback to 25-day moving average here. And then we got here Apple. Apple is again another bullish play here. With Apple, I think it's good to look at this iPhone 13 news here. Typically, it will come down a little bit, if there is some hiccup around the iPhone 13 rollout. So right now, stock is almost at all-time high. I would wait for a little pullback here. This stock also looks like it's trying to go, bounce off of its 25-day moving average. Apple is a great stock. Any drop, minor drops here, it's a good one to buy. I would wait a little bit, wait for a little dip and then buy Apple. And then we got here Amazon.com. Clearly, Amazon, I think they had their downturn a while ago. Now they're trying to go up. I think even up here, Amazon is a good one to buy slowly into any weakness and take it from there. Right now, they're trying to bounce off of their 50-day moving average. Right now, as you can see here, RSI is 57. That tells you, out of, these two, Apple and Amazon, Amazon is a better buy because RSI for Apple is 66 and Microsoft is 63, whereas Amazon is still trying to recover from its drop here. RSI is 57. And then you got your Facebook here, one of the greatest stocks here. They're doing a lot of good things here. I think I would probably wait for this to drop off to 25-day moving average around 366 or so, and I'll scoop up some Facebook at those levels. And then we got Google here. Google, I think it's a great stock, but right now it's good to buy Google. They're trying to bounce off of their 100-day moving average. There's some temporary weakness here. RSI 44 tells you Google is oversold at this level and good to buy some Google at these levels. And then we got here Netflix. I would wait here a little bit. Netflix, as you can see here around the earnings, it will always give you some opportunity to buy. Right now, if you have some stock, you can take some profit. Otherwise, I would not initiate a new buy in Netflix at these levels. Then we got Nvidia here. It's a greatest stock in the semiconductor area. Right now, it's almost at all-time high. I would not buy Nvidia at these levels. Instead, I would wait a little bit for a pullback. Then you got J&J. J&J is a good one to buy here. RSI is 53. And as you can see here, it's trying to bounce off of its 25-day moving average. It hit its 50-day moving average a while ago. So I would buy some, J&J slowly at these levels on any pullback. And this stock always, goes up in the long term. Then we got PayPal here. PayPal is a basically a fintech play here. It's trying to bounce off of its 50-day moving average here. I would I would wait for a little pullback here. RSI is a little high for me, 58. I would wait for a pullback. PayPal always gives you pullbacks. I would buy during the pullback. We got UNH here. UNH is again a great stock into healthcare insurance area. Right now it's trying to bounce off of its 25-day moving average. I would wait for a pullback before I buy some UNH. On the other hand, Merck is a good one. It already had a small pullback here. I would buy some Merck at these levels and and hold the stock for a while. Medtronics looks like elective surgeries are back. People are taking elective surgeries. Medtronics is surging here. Little temporary weakness. I would wait for it to cool off a little bit and then buy Medtronics. And we got your JP Morgan along with the Berkshire and Visa and even MasterCard. I think I would buy all these stocks at these levels. You see temporary weakness here in JP Morgan, Berkshire, Visa, MasterCard, even Bank of America and Morgan Stanley. I would buy these financial services. As we have seen, the long-term trend is still good for financial services, but this is a temporary weakness. We can buy at these levels and hold it for a while. Next, we'll see a few more stocks here. We got Oracle. Oracle, as you can see, a great enterprise software company. Right now, stock is trading along with the 25-day moving average here. I would wait for this stock a little bit. I think typically they announce earnings a little bit later. They also trade wildly around earnings, as you can see here. I would wait for a pullback on Oracle and then buy Oracle. SAP also, it's a great enterprise software company. This also I would wait for a little pullback here. Probably if a pullback to 50-day moving average around 145 could be a good one to initiate some buy. Then you got Shopify here. Shopify also right now it's in a good territory to buy. RSI is 49. Stock is trying to bounce off of its 50-day moving average here. I would buy some Shopify on any down day and take it from there. And Snap, I think after this huge gap up here after the earnings, is trading sideways right now. I would probably buy Snap around 70-day, which is $70, around 50-day moving average, and take it from there. Twitter, same story. Right now RSI is 45. Twitter, you can buy at these levels here. I think it's sold off here. I would buy some Twitter here. Then even Take-Two Interactive, the video games like Take-Two, Electronic Arts, and even Activision Blizzard, Zynga. I think they're all in a good territory to buy here. With people working right now, the demand for these video game players are coming down a little bit, or that's the perception. So I would buy some great companies in the video game area with this weakness. And then you got AMD here. AMD is doing great. Looks like it's trying to bounce off of its 25-day moving average. I would wait for AMD to cool off a little bit. I've seen this stock around stuck at 80 for a long time. I would wait for a little pullback and then buy AMD. And then we got your mRNA. It's a Moderna along with BNTX and other cohorts. Any bad news, I think it's good to buy. For example, stock dropped here. Now it's trying to make its way come back here. I would wait for a little pullback. This stock always comes up and down by $10, $15 easily. On the down days, I would buy some mRNA and take it from there. And then you got American Express here, great fintech company. I love American Express. With the COVID and especially softness in the travel, this stock is taking some beating. I would buy some American Express into this downturn here. It's a great stock. It will always come back. And then you got CVS. CVS after in a bearish territory for long time, slowly it's trying to make its comeback here. I would probably wait for a little pullback here before I pull the plug. Then we got here ABBV. Ouch! Look at this drop here. I think ABBV is a great stock. I think they had some, a little bit negative news, in the press here. I would buy some ABBV at these levels here. After this steep drop here, ABBV is showing some promise, as you can see here, a green candle here. I would buy some ABBV into this weakness. It's a great stock. It will always come back. It's a even good dividend player. There is dividend. There is capital appreciation. I would buy some ABBV. And then we got here Edward Life Sciences. This stock was I've seen this stock dropping in the past. As you can see here, one drop, second drop here. I would not touch this stock at these levels. I would wait for a drop and then buy Edward Life Sciences. It's again medical devices play around the elective surgery. And then you got Bank of America here and Citigroup and MasterCard. All of these are in the financial services area. I would buy these stocks. Look at the RSI here, 51, 49, 30. MasterCard is completely sold off. I would pick up some of these stocks at these levels and go from there. And then you got Lowe's here, home improvement. Stock has gone up tremendously after the earnings here. I would wait for this to drop off a little bit, maybe to 25-day moving average around 200 before I pick this stock up. So we got few more here. These stocks have made some major news in last week or so. First one is CHWY. It's a pet food type company here. Stock dropped after the earnings all the way from say $80 to 76 or so. At these levels, I think CHWY is completely oversold here with RSI 32. I would buy some CHWY at these levels and go from there. And look at the IV percentile. If you're an option person, look at the IV percentile here, 0.9. It tells you even if you want to buy a long-term CHWY call options, you're not paying too much with the IV so low. Then we got here Zoom Video. Zoom Video also dropped off, after a little bit not so great perception of their quarterly earnings. I would buy some Zoom Video along with Kathy Woods here. Companies trying to go into the adjacencies and introduce Zoom Phone. I think that will be good for the company. And then we got Autodesk here. Autodesk after the earnings dropped and some more drop here. Now trying to stabilize. RSI 36 completely oversold. I would buy some Autodesk at these levels. It's a great stock. It's a subscription company. I think they will do well. It's completely a software play. And then we got here Five Below. As you can see here, stock dropped after the earnings. I think it's a tough comparison to last year, where folks wanted to buy many of these retailers. Right now, it's a good time to buy. Five Below, RSI 38 indicates stock is completely oversold here. I would buy some Five Below at these levels here. Then we got OLLI's. OLLI also same story. After the earnings, stock dropped. Now it's trying to stabilize here. I would buy some OLLI at these levels and take it from there. And many of these retailers have dropped. Think about American Eagle Outfitters. Again, that also dropped, and a lot of these retailers are good to buy at these levels. Then we got here Alibaba. Alibaba is a big, large cap, a Chinese stock here. I think stock is trying to gain some ground here slowly. I think there is a turnaround in the sight here with the Chinese government. Probably they always crack down for a while. Then they ease off. I think it's a good one to buy here. RSI is 42, completely oversold. And you could even look at FXI, which is a large cap Chinese ETF. You could buy some FXI also at these levels and take it from there. There are a lot of good Chinese names here. Even NetEase, NTES, that's a good one. Even JD and Weibo, and you could look at some of those names. And then you got here AMD here. I would wait for a little pullback here. It's doing great. And we got Lucid. Lucid is supposed to be a Tesla killer. Stock dropped a lot. Now it's trying to gain some traction here. RSI is 38. I would buy some Lucid at these levels and take it from there. Then you got Stoneco, Brazil-based fintech play here. Stock dropped after the earnings. I would buy some Stoneco at these levels. I think they will do well as we go forward. Stock is completely oversold. We got MasterCard here. Stock is dropping like a rock here. It's a good time to buy some MasterCard at these levels. RSI 30 tells you stock is completely oversold. And we got Peloton. Peloton had their earnings and stock crashed. It's good to buy some Peloton at these levels. There are a lot of people who love Peloton. They have all these Peloton clubs. People want to watch each other, how they do exercise, how they keep up on the competition. I think it's a good one to buy at these levels here. Then you got the gun maker, Smith and Wesson here. Stock after the earnings, stock dropped a little bit. I think at this time it's good to buy some SWBI and hold it for a while. We got Groupon here. Groupon also dropped here after the earnings big time. Stock is $22. Completely oversold by RSI 28 here. I would buy some Groupon at these levels. And we got Virgin Galactic, Richard Branson's company here. Stock is dropping big time. RSI 38. I think it's a good one to buy here. The Virgin Galactic always gives us some surprise. Its leader, Richard Branson, I think he always makes some news that can take the stock higher. And then you got your cruise liners. Think about Royal Caribbean, Carnival Cruise Line, Norwegian. I think all are a little bit pausing here. I would buy some of these stocks. They always give some good news as you go forward. And then you got your crypto. Think about RIOT, blockchain, BTBT, Marathon Digital, and so on and so forth. Right now looks like they want to come down a little bit. I would scoop them up slowly at these levels on the down days and accumulate. So with that, now let's look at major ETFs. So if you look through the major ETFs here, we got XLRE, real estate, QQQ, all of these as you can scan through here in 1 month. Many of these ETFs have done great. And then we got some down here. We got Invesco, this is a US dollars is down. Retail, as we talked about, is down. And we got interest rates are down here a little bit. And we got XAR, big defense contractors and aerospace stocks like Lockheed Martin and Northrop, Boeing, and even Raytheon. They're all a little bit down here. So this will give me a good indication of where to focus on. Look at the long-term picture here, as many of these have done great in the long term, and look for some temporary weakness. As an example, if you look through here, retail XRT, temporary weakness here in 1 month and even 5 day and 1 day. But look at the long-term 10-year trend here. It's 363%. So I would look at this weakness here and scoop up some good stocks like 5 below as an example, like CHWY and OLLIs, and scoop up some and take it from there. Then as you look through here, we got somewhere here, we got XLF here. XLF is a little bit struggling in the small nearer term here, has done great in the long term. I would pick up some XLF here, and even utilities, as you can see, are struggling a little bit, has done great. I would pick up some nice good utility stocks here. That's how I kind of look at the long-term picture, see how it's doing in the long term, and spot some temporary weakness, and look through this ETF and spot some good stocks and then buy them. Next, we look at ETF winners. As you see here, in 1 month, these ETFs have done great. What's going well right now? We got cryptocurrency stocks like Ethereum, even Bitcoin here. Uranium is coming back, as you can see, are done great in 1 month, and natural gas, and even robotics. As you scan through here, we got cloud computing doing well, cybersecurity doing great, India coming back here, biotech doing well, fintech, cathodes, fintech ETF is doing great. So what I would do is really I would look at some of these ETFs and see what stock they're carrying, and on the down days buy them. Right now they're doing great. Don't buy them at these levels, but when they're doing a little bit not so great or pull back a bit, then you could buy some of those ETFs. Look at the performance of some of these ETFs in 1 month. It's a very good performance here. So it's good to watch the trend here and go from there. For example, when Bitcoin is doing well, you could watch stocks like BTBT, Marathon, and even the right blockchain, and some of these stocks here. Look for a temporary weakness and buy them at those levels. And now let's look at ETF losers here. We got here a bunch of ETF losers. As you scan through here, clearly you can see MJ, which is cannabis stocks here doing not so great. You could pick up some good names like Canopy Growth or Tilray, and some of these names, even Grow Generation for that matter, or IIPR, and buy some of them on the weakness. And we got here gold and silver. I think they are not doing great here. I think you could pull gold and buy some gold and silver into this weakness and hold them for a while. You got ABBV as example, a good gold play, and a lot of great silver stocks. You could buy them. And we got here solar, and solar is a good emerging growth sector here. Into this weakness, I would buy some solar stocks. Think about Solar Edge, Enphase Energy, and even Sunworks and some of those names, and buy slowly into this weakness here. And as you scan through here, oil is not great. TLT, 20-year treasuries are down a little bit. I would look at some of these themes like MJ here, which is cannabis, and materials like gold and silver, even TAN, which is solar. I would buy some of those stocks here into this weakness and take it from there. So with that, thank you very much. Happy investing and trading. Please subscribe.